This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. Today's show, you'll hear investor perspectives on COVID-19's impact on education and on startups. COVID-19 has changed the landscape for startups, giving us a new normal. During the pandemic, it became clear the need for changes in our education system. We have joining us Jon Broscious, an investor in the education space, accelerating investing in early-stage startups at Mucker Capital. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with Jon Broscious of Mucker Capital. Jon, thank you for joining us.
Yeah, thank you. I'll appreciate it.
Well, we're going through the COVID pandemic and coming out of lockdowns at various stages, and we're seeing COVID change many different industries, and a major one is education. And we're seeing the impact of COVID on the sector itself. And I want to discuss what you see coming up and how COVID-19 is impacting the education sector. At a high level, what is your take on that?
Yeah, I think like many industries, we're seeing changes across the board. I think with education, what's interesting, though, is that some of these changes could be temporary, and I think some could actually be longer term that potentially impact social norms. So as I look at the education market, from an investment perspective, there's kind of four buckets: early childhood learning, anywhere from kind of 3 to 6 months to fourth grade. Largely look for additive learning resources there because I think childcare is fundamental. We're seeing homeschooling obviously being pretty necessary right now, and we'll unpack that a bit later. And then in terms of the analytical learning, that's anywhere from kind of middle school to high school. Then you've got higher education, which I would say is not necessarily prepping students on the right outcomes with skills-based acquisition. And then finally, you have continued learning, retraining, and upskilling post-higher ed. I think a lot of change that we're seeing in higher ed right now was already in motion pre-COVID, but at a minor scale. And I think there's going to be a continued movement to skills-based acquisition. From a macro perspective, we've seen employers want more skills, in part because the average employee tenure is only 2 years now, and there's really no longer the concept of journeymen or women. And a significant driver to increasing costs in education sticker price has been administration cost bloat. About 2/3 of the increase in education sticker price has largely been to administration costs. And that doesn't necessarily translate to value to a student. Overall, education costs have been rising about 2 to 3 times that of inflation, as is childcare. And there's a little over, I think it's like 1.6 trillion in debt now.
So why has the administration cost gone up so dramatically compared to the core skills training portion?
I think there's some regulation involved. I think there's functions around additive professors and salaries increasing. And there's really a lot that's at play. There's also resources going in to attract students for enrollment. So the provost office has been much less focused on the advancement department than they have ensuring students graduate. There's butts and seats in terms of freshman year enrollment. And so a lot of these costs are going to trying to get folks in seat and progress to 4 or 6 year graduation.
On the K-12, there was a big shift a couple of decades ago for testing, meeting test requirements, standardization, and so forth. Do you think that had an impact on the cost and the direction education took?
From a public perspective, so primary and secondary, that's the case. I think there's not incentive alignment around superintendents. And admittedly, it's hard to do, right? So it's hard to measure skills-based metrics. It's much easier to quantitatively measure test performance in college placement. But overall, I think you're going to see shifts up and down the value stream, largely because I think we're moving to this skills-based acquisition environment, not only in higher ed. I think it'll manifest itself there first, but potentially even in high school and middle school.
Well, assessment seems to be a critical factor. I've had many education deals come through, and I've heard many people talk about looking for skills assessment, understanding exactly where the student is, what did they master, and getting that assessment piece right. How do you think technologies move forward in that sector?
Yeah, so we're investors in a company, and this was with my old fund social starts called Lambda School. And what they've effectively done is reverse engineered the software programming skill set that an employee would need and train you within 9 months. And so while there's a lot of value to both liberal arts degree in terms of analytical thinking and a CS degree in a 4-year college, these sorts of programs, I think, will start becoming more competitive as a potential option for someone that's entering, like now, is considering a gap year because they don't necessarily want to take courses over Zoom. Right now, Lambda School is focused more on kind of uptraining and reskilling, but this is an effect that COVID's had in terms of incoming students kind of questioning social norms in terms of the traditional progression that we've seen with the U.S. education market.
All right. And so to get back to COVID, it seemed like it moved forward many aspects of education, such as the online component, and then it's slowing down many other aspects that were used to be done in person and so forth. Where do you see the most change going to be taking place?
Yeah, so I'll talk a little bit about some new applications that we'll see and that we look at from an investment perspective. So there's some digital and additive education platforms that were happening pre-COVID and are happening during COVID. I mean, the first wave of this was largely massive open online courses about 10 years ago. They had pretty low engagement. And, another phenomenon that I guess I want to mention is, I forget who said this, I think it was with someone at Andreessen Horowitz, said that some of the smartest folks will be the folks that'll be the best Google searchers. There's so much rich information right now online. And so I think we're now starting to see productized education products that I wouldn't even say are traditional ed tech and are more alternative means to learn. And then as we think about in China, podcasts are actually called additive learning resources. So I'm closely watching kind of how the Western or the US podcast market changes because it's about 10x larger in China right now. The other thing that I see in terms of kind of interesting education platforms, there's a company called Roblox, which is effectively allowing folks to create games and play games. And it's gamified. So, it's actually like what you'd see with video games, but it's actually a form of skills-based acquisition. It could produce a career and it's fun, and people that like it and are passionate about gaming or have an interest, there's pretty impressive usage on that platform. And so I think that's a theme too that we may see not only in higher ed, but this interest-based and fun environment where you can actually acquire skills, how to program, how to web design, how to build games. And so we had the notion of a well-rounded college applicant 15, 20 years ago. A lot of that can produce the infrastructure for primary or secondary education. I think that will change because I think digital communities will start coalescing around these specific interests and skills even early on in the development process.
And so there are new technologies out there like AR and VR, virtual reality. Do you think those are going to have a place in this new realm of education?
So on the VR side, I don't think so as much. I've seen some potentially interesting use cases around mental health. On the AR side, I definitely think that's the case. I wouldn't say I'm an expert on augmented reality, but I think there's use cases like with trade schools. And so as hardware starts catching up in this space, as well as like kind of the evolution of computer animated design and how that's married with augmented reality, I think there could be some specific education use cases, but I think that we're still a few years out from that.
So what new applications within education that you think we'll see come up?
I think a lot of what I mentioned around alternative education options, like we see with Lambda School, I think I've looked as well as like additive, kind of vertical specific additive learning platforms. So there's a company called Osmosis. There's a competitor here in Austin as well that creates a lot of bite-sized content to help medical students get through their pretty rigorous process for the first 2 years of schooling. And that content actually becomes pretty defensible as a means for additive medical education for nurses and doctors too. So there's some applications there as well. And then on the earlier side, I think there's a great fund in San Francisco called Mucker Capital that's done a lot around Montessori schools. I think those not necessarily will make a comeback, but the curriculum and the training and the development on the early childhood side is pretty powerful. And there's a company that actually produces products called Monty Kids for 0 to 3 years old in development that's had some pretty impressive results. So those are some of the things that we're looking at. And I do think there's going to be a need for reskilling and uptraining too. And some of that can take place with software programming or web design And those are alternative schools. Their first generation was really the General Assemblies and those sorts of programs. And now I think there's more financial incentives that are tied to both the company and the student, like with Lambda School, with income share agreements. So there's even some new kind of financial instruments that I think will be interesting.
So how has COVID updated your investment thesis for education? What changes did it make that you're looking for now?
Ironically, it hasn't really changed it that much. The past 3 or 4 years, I've really been focused on these alternative education platforms as well as skills acquisition development, particularly in higher ed, but even slightly before. I've looked at products across all 4 of the phases that I've mentioned. From an investment perspective, though, I do worry that there's a lot of capital that's going into a lot of older guard technologies. So, for example, regional digital tutoring platforms that may be experiencing an uptick, but their revenue, their users will likely regress to the mean in the next year or two. So I'm still really focused on a pretty similar thesis. I think one thing that I did realize coming out of COVID, and this has applications beyond education too, is that individual educators can actually become companies through some of these products. So there's a marketplace, it's called OutSchool, that's effectively connecting teachers and students with an additive course. So it's not trying to replace traditional public or private or even homeschooling infrastructure. You could take a course in computer science, for example, as a 7th or 8th grader from a cost-effective manner. And these educators can actually make more money than they would, say, teaching in a traditional educational infrastructure. So I think this theme of not only individual educators, but just individual creators that can run their own businesses themselves is pretty interesting. And I think that's could really change the dynamics on both the educator and pupil side.
Well, in the past, at the college level, professors who wrote their own book could actually do quite well if the book was popular, picked up by more publishers and other universities. And then, of course, 3 years, they'd have to update it. And here it seems like that's going to the next level. People could do their own YouTube videos, they could do their own online content, and they could have their own brand or sub-brand in their specialty that would attract more students. Because as we move away from the physical university to the online, it opens up the boundaries quite a bit more. You think we're going to see a lot more of that?
Yeah, I think we'll see some of it. As I'll mention, and part of this is a thesis, right? It's relatively cautious, right? It's looking for platform creation around the edges where, maybe eventually social norms change where these could be trade-offs. But in general, I'm still a big proponent of higher education. I'm a big proponent of public education, particularly even for those less fortunate, right? Because it provides a means for childcare, for meals, for education. So I think a lot of these things are more supplementary to the traditional infrastructure. But I do think that, we'll see more and more of this around the edges, and particularly around skills and interest-based groups that can be formed in terms of digital communities.
Right. Well, at the K-12 level, the public funding comes from the federal government and state and local governments. That regulatory seems to be a bit of an issue. How fast do they change? How fast do they upgrade curriculum? And how fast do they move forward? What do you think the impact of regulatory is going to be on education? And how do you think COVID is changing that?
Yeah, that's a good question. I think a lot of that will manifest itself after we focus on a lot of our near-term needs. I'm not 100% sure. I do think that there's incentives and there's stakeholders that are potentially more ingrained in the education side that could impact the direction of where education goes. And oftentimes I do draw an analogy to healthcare, right? So with telemedicine, I actually think that will really continue to accelerate in terms of usage, even post-COVID, because people have gotten kind of their first taste and have figured out how to augment their experiences. They're still going to go into the doctor, but they're also going to leverage telemedicine when they need it, whether it's for a prescription or a quick checkup or a dermatology appointment or something like that. So on the healthcare side, I think there's more things there, even though there's a lot of regulatory tape with healthcare, right? There's some ancillary or secondary services that will continue to accelerate. I think when we think about education, right, I think we're particularly on the primary and secondary side, so less the higher ed side, because we focused probably most on the higher ed side earlier. What's happening now is parents are really recognizing the value that primary and secondary education have, because it's not even just schooling and development and child development. It's also a function of childcare, right? From 9 to 5, parents are struggling to get work done. And so I'm not exactly sure what will happen from a regulatory perspective, but I do think there's also an increased perception of the value of education since we've experienced this pandemic the last 6 months.
It seems like online education brings a lot of new factors and dimensions to education, and a lot of great things will come from it. But it just doesn't seem like the answer is 100% online. It seems like it's still a combination of in-person as well as online. And then what do you do in one and what do you do in the other? And I hear a lot about pod-like classes, small groups that come up that you can learn in, socialize, interact with other people, including the teacher, and then doing some things online where it's just yourself. You don't have to travel anywhere. And during lockdowns, you can do more of that. Where do you think the trade-off is between those two sides of online versus offline?
Yeah, I mean, I think the first thing to consider is that there's a pretty significant cost where the majority of the population might not be able to have access to that. It's still much less than, say, private education, but I think that's the first consideration that should be noted, because it's still a relatively new concept. Homeschooling was about 5% pre-COVID. It's going to go up to 40%. And then my gut is it's going to normalize somewhere around 5 to 10%. But I don't think it's going to be the status quo, because I think it's necessary now. And as I alluded to earlier, it's also a function of childcare for folks kind of under 3rd, 4th, 5th grade. On the micro schools or the pods, there's a company actually that's getting a lot of traction, particularly for this fall, that's called Try Homeschool. It's out of New York. And, this micropod concept, I think, is actually really interesting from the development of smaller classes. It's 4 or 5 students. They can really hone in on different interests, different skill set. There's more teacher-student time that's allocated. But again, there's definitely a cost barrier to that. So most folks can't afford even, a few $1,000s to educate their kids. And there's coordination around remote work too, because you might be trying to do it in a backyard, and people in urban environments might not have a facility to still facilitate this pod system. So we'll see how that plays out. I think it's really interesting. There's also a few other companies like Prem the Learning. There's Primer, which is 100% digital. And then there's Source Schools out of Atlanta that was doing a homeschooling product in middle schools and in high schools. And all of them have iterated a bit, given the times too. And I think we'll see their traction in the next, year or two. I think it has been interesting though, because it's been a catalyst for people to explore new things. And so I think great products will encourage, social norms to change, but I still don't think it'll ever be dominant or the majority in terms of how parents educate their kids.
Oh, great. So for startups that are putting together edtech startups today, what do you tell them to do, and how should they COVID-proof their business so they stay in business going forward in case we go through another lockdown?
Yeah, I think this has been an opportunity for them to acquire a number of customers, because a lot of folks are looking for different digital solutions right now. And we've kind of largely come into a grinding halt, or at least 40, 50% are not in college or not in primary or secondary education. It's likely inevitable that some of these customers will churn, but if you create incredible experiences for customers, that can lead to long-term benefits. And even if it's something that's more full-time now, there's still ways to build additive or kind of secondary learning experiences with your brand. So while they may expect some fall off in their services post-COVID, I think a rich education experience will bring customers back and can even shift social norms longer term.
Great. Well, appreciate your sharing that with us today. In the last few minutes that we have here, what else should we cover that we haven't?
I've seen some pretty interesting products in terms of learning in the background, if you will. There's a company called Toucan, which is a Google Chrome extension that allows folks to hover over, when they're reading an article, different words, whether it's the definition in one's particular language or if they're trying to learn a different language. So I think those sorts of products too are interesting additive education products that can help people to continue to learn.
Great. Well, appreciate you sharing that with us today. How best for listeners to get back in touch with you?
Yes. If you're starting a company, if you have any questions on education, if you agree, disagree with some of the information we shared today, would love to chat about it. So my email is Jon @muckercapital.com.
Great. Well, I'll put that in the show notes, and want to thank you for joining us today and hope to have you back for a follow-up soon.
Great. Thank you all.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.